I assume people are still joining in, but we have already lots of participants. My name is Torben Minko. I'm the Vice Chairman of EuroCham, and I will give the introduction today of this interesting session that we have today. On behalf of EuroCham, I would like to thank all of your interest in our webinar today. And as I said, we are expecting around 100 registration, and we will see that we will get it full. Let me start by thanking all corporate partners in 2023, as you can see on our backdrop, for their valuable support. The trust and the support truly motivate us to keep going to what we are doing right now. Yeah, let's right now start with our webinar. So 2023 is turning out to be another very volatile year for Vietnam. As we can see, as close as the inflation and the downturn of the global economy is approaching, in Vietnam, we seek the balance between strong consumer spending as well as the continuation of the tourism flow research that we are seeing here, while on the other hand, we are facing somehow a real estate sector crisis, as well as also feeling the domestic inflation. Today, we organized this webinar to help companies in Vietnam to understand better the EuroCham BCI, the Business Climate Index for Q1. This is an index based on the opinions of our members, which is published every quarter. And we will see this one was published right now. To deliver insights to the European business and investment community's perception of the Vietnamese market, as well as clearer view of the business environment in Vietnam. If you have any questions today, please use the chat box. We will have, after the two presentations, we will have a Q&A session. And then during this Q&A session, both of our speakers are available for answering your questions if there are any. Today, I'm very delighted to welcome two of our highlight speakers. One is Tim Evans, who's the CEO of HSBC Vietnam. Tim is with HSBC already since 30 years. And within the 30 years, he held various senior leadership positions spanning over 3 continents and 7 markets. Prior to his appointment as CEO as HSBC Vietnam, Tim was the regional head of the commercial banking international markets in Asia Pacific. And Tim is also a member of the Chartered Institute of Bankers. So I'm very happy to introduce Tim today. Our other speakers is Thue. Thue is the CEO of DecisionLab. Thue has more than 20 years of experience in marketing, research, and consulting. He's since 14 years in Vietnam, where he co-founded at the very beginning to grow Opinion in Vietnam. And then he's working now for DecisionLab. He's a senior expert in the brand building, consumer understanding, and commercial strategy, developing across finance, F&B, e-commerce, and education. So with that saying, I would like to welcome both speakers. And without further ado, Tim, the floor is yours.
Okay, well, thank you very much, Torben. Thank you in particularly for referencing that I've been with HSBC for 30 years, because just to clarify things, I did start at the age of 16. But I'm going to now just try and move so I can share a screen. Hold on, bear with me 1 second. Let me just see if we can get the technology to work. Share. Oops, 1 sec. How are we doing? We okay? Can you see that, Torben, and everyone else?
Yeah, we can see the screen.
Okay, awesome. Well, I just want to caveat before I start giving you guys a summary of how HSBC has seen the first quarter performance. I am not an economist, so I'm sorry to disappoint you on that front. I'm merely a banker, but I do have the benefit of customers who educate me and a global research team that provides me with data. So I will do my best. But if we look at the Vietnam outlook, it's fair to say that 2022 was actually a very positive year for Vietnam. We saw a marked bounce back. Vietnam was one of the first countries to reopen in a post-COVID environment. And we had a very, very strong third quarter and a relatively strong fourth quarter. So the country came in at 8%, or just over 8% GDP growth in 2022. And it's fair to assume that we thought good times were ahead. We felt COVID was behind us. Yes, there was the big question mark of what the impact of the Ukraine-Russian war would have, and clearly had a knock-on effect to commodity prices and then the inflationary pressures it's given. But Vietnam had weathered those relatively well, and the view was that Vietnam was on a positive trend and that 2023 would be the same. But there were already a couple of challenges that were starting to manifest themselves in the economy. And the first is that around October, November, we started to see some very, very real wobbling in the real estate sector in Vietnam. And the knock-on effect of that to the financial sector was actually fairly substantial. And the reason for that is that, as many of you know, in Vietnam, banks are limited by how much they can grow every year. It's called a loan growth cap that the State Bank of Vietnam every year implements and advises to banks, and is, for one reason, a way of sort of handling credit growth so as to manage any inflationary pressure in the economy. But what this has meant is that a number of banks, local banks, have not been able to lend to the real estate sector in the quantums that they want because they've been up against that cap. And so what they have done is issue bonds on behalf of real estate companies, and those bonds have been sold to retail investors in those banks, often with the retail investor not knowing what they're buying. So roughly 40% of all bonds, in fact, north of 40% of all bonds issued went to retail investors, with retail investors not really understanding what they were buying. And so when there was these arrests that took place of Madame Lan in VTP and the knock-on effect to Novaland, we saw a stress situation with Saigon Commercial Bank. This was the 5th largest bank in the country. I think they sat on deposits of around $58 to $60 billion. And this created intense challenges across the financial sector, and also put a lot of pressure on the bond market, because the bond market, which is roughly $60 billion in Vietnam, so it's not too big, it's roughly 15% of GDP, so smaller than it might be in Thailand or the Philippines or other sort of emerging markets. The reality is that of that $60 billion, the average tenor is 3 years. So it's safe to assume that every year, $20 billion of bonds need to be refinanced. And that's where the challenge lay, because the retail investors were no bid. The sophisticated institutional investors were also not interested, because they realized that they were propping up real estate companies that were using this to buy up big land banks, and that real estate was no longer flavor of the month for the government. So this big refinance challenge was impacting the broader economy. And that was there as we entered 2023. So you could have looked at the start of 2023 as either a glass half full or glass half empty, depending how you wanted to look at it. You may have said, well, the challenges to the real estate sector are limited to them, but the broader economy continues to perform. And it's true, there were some positives. Manufacturing FDI continued to come in. And if you look at this slide, it's a percentage of GDP. So whilst it shows that it might be coming down, you have to bear in mind this is a percentage and the economy is growing at the same time. So FDI continued to be a broadly positive story last year, most of which goes into the manufacturing sector, most of which is export oriented. So there was still some momentum in the FDI space. You had the China reopening. So there's a very strong correlation between the performance of the Chinese economy and the Vietnamese economy. So a 1% growth in GDP in China equates to roughly 50 basis points in Vietnam, but the inverse is true as well. So if China shrinks by 1%, Vietnam loses roughly 50 basis points. So the reopening, which happened actually quite suddenly in China post-Chinese New Year, around Chinese New Year, was hoped to have some positive impact on the economy and the Vietnamese consumer. So the Vietnamese consumer has been a real sort of propeller of economic growth in Vietnam and continues to be. Our research shows that by 2030, Vietnam will be the 10th largest consumption market in the world, so bigger than the likes of the UK, Germany, Egypt, Thailand. And that consumerism and that push towards the middle class continues to be a very strong component, ingredient to the Vietnam story. And if you look at the retail sales that happened in January, they continue to be very robust. Now, partly this was due to Tet falling at the end of January, so you get a little bit of a spike. But either way, you can see through 2022 that retail sales continue to rise, a reflection of the Vietnamese consumer feeling confident in spending. And there was other positives. We were hopeful that the tourism would bounce back. That would add additional impetus to the hospitality sector. And HSBC, which granted is a highly conservative bank with Scottish origins, we came in with a GDP forecast for this year of 5.8%. Now, it has to be said that consensus across most of the banking sector was north of 6%. So we were seen as an outlier on the downside. And one of our competitor banks actually had a forecast above 7%. But the reality is that in 2023, there were dark clouds on the horizon. And I think as we move further into this year, we're starting to see the reality of those dark clouds and how they're impacting not just the Vietnamese economy, but more broadly, the global economy. So you'll see here that tourism, whilst it did rebound, and they had roughly 3.6 million tourists last year, has not rebounded to the same extent that was either hoped or forecast, and certainly not to the same extent that competitor markets have seen, certainly Thailand, Indonesia, and Singapore. And there is a reason for that. It's that Vietnam has far fewer visa-free arrangements than any of its regional peers. So you'll see here that Vietnam, and I can't remember what the exact number is, but it's around 20 or 30 countries that are visa-free. If you compare that to Thailand, Malaysia, Singapore, Indonesia, Vietnam is very much an outlier. Now, my understanding is steps are going to be taken to address this, and it has to go to the National Assembly, and that on a best efforts basis, it might happen in May, but half the year will have gone by then, and most people have planned their holidays. So unfortunately, I think this is a little bit of an own goal, because this really was an area where Vietnam could have outperformed, considering it opened on the 15th of March last year and had far more opportunity to do well in this space. But unfortunately, I think they missed some very real opportunities to allow tourism to support the economy, because it was roughly 10% of GDP in 2019. We've also seen a marked slowdown in the export markets. So Vietnam, as it's become more integrated into the global supply chain, is now more susceptible to slowdowns. So we're seeing a slowdown in the US economy. We've seen a slowdown in the European economy. We continue to see people switching out of goods into services. So this was a trend that started post-COVID, because during COVID, everyone bought new flat screen TVs and tablets and phones and sofas and coffee tables and everything else. And as we came out of COVID, people started to spend it on travel, entertainment, eating out, etc. And that trend, coupled with the fact that interest rates have risen to incredibly high rates very quickly in many of the key markets, has meant that consumers have felt the pinch and have not been prepared to spend as liberally as they had done in the past. The other one is the electronic sector. The electronic sector boomed during COVID, primarily with people sort of working from home, and as I said, buying the new flat screen TV and all the other sort of toys you can get. But also industrial electronics has seen a marked slowdown, and Vietnam has been a very big beneficiary of investment by electronic companies into the market following the sort of China Plus One strategy. But the likes of Samsung, LG, all those that supply Pegatron, Foxconn into Apple have all felt the pinch, and they roughly represent 25–30% of Vietnamese GDP. So that continues to be an area of pain for the economy. Oops, sorry, I went the wrong way. And you'll see here that the trend continues to be down. If you look at the S&P Global Electronics PMI Output Index, it is negative. We don't see a turnaround, a material turnaround happening this year, and this will continue to be a very strong headwind for the Vietnamese economy. But it's more broad than that. And if you look at these statistics here, you'll see, yes, phones and computer electronics are down, but so is textiles and footwear, so is machinery and equipment, so is wood and wooden products. It really is kind of across the board. And that has manifested itself in a first quarter GDP growth rate of 3.3%, which if you see where we were during the fourth quarter, is a material reduction in output, and actually has taken many people by surprise, I think, including the government, but certainly the banking sector and key customers. Talking to a company called SSA Marine that runs one of the ports here, they've said that the throughput of their port is at its lowest level in over 4 years, including the COVID period. Now, there are some positives to this because port space was very limited in Vietnam. They were operating at over 100%. So this downturn means that they have a chance to do some preventative maintenance, maybe invest in building out port capability. But the trend is negative, and the big concern is it's going to take a while before that turns around. So yes, Vietnam is hugely vulnerable to external shocks, far more than maybe it has been in the past, given the FDI in manufacturing, export out story. It is far more susceptible to the US because that has now become its key export market. And if you look at a summary of the key economic indicators during the first quarter, oops, I beg your pardon, you will see, sorry, I just need to move part of the screen across. You'll see that for PMI, it's at 47.7. So again, this is negative. Anything sub 50 is considered people not having confidence going forwards. Exports are down 14.8%. Imports are also down 11.1%. Now, imports are down because a large component of imports coming in are then turned around and re-exported. So the two are linked. Manufacturing and industrial production was down 14%. And the only upside is that CPI, so inflation, official inflation, was at 3.4%, which means there's been some respite on the inflationary side, but which has meant that the Vietnamese State Bank has been the first Asian central bank to actually cut its policy rate by 50 basis points effective from the 3rd of April. So this is still against what you're seeing in other markets. Our forecast for the US is that there'll be a 25 bip still rate rise in May and potentially another 25 bips in June. So terminal rates will be around 5.5%. Vietnam is going the other way because clearly they're trying to stimulate the economy. But the big question mark is stimulate it to do what? Because where can you export to if they're not buying? And especially if rates continue to go up in key export markets. So if you look here, you'll see a table of the Vietnamese economy. You'll see that here, industry and construction in the first quarter was actually down 0.4%. So this is, this includes manufacturing, which is the third line along there, which is also down 0.4%. But you'll see that services were at 6.8%. So the truth is that the economy is being propped up far more than we expected by the service sector that continues to perform relatively well despite some of the challenges in the tourist sector. But what does it mean about the Vietnamese consumer? So far, they've been strong spenders. They've propped up the economy. The growth of the middle class continues to be a key theme for the Vietnamese economy. But the view is that the Vietnamese consumer is starting to get very cold feet. And if they do get cold feet and just start to spend less or get more conservative in their spending, there will be a knock-on effect to the economy. And we've already seen that. If you look at this slide, you will see that big ticket items have fallen sharply. So the black line is car sales. Excuse me. They have already fallen very, very significantly. But if you look at other big ticket items, which is television sales, cell phone sales, all of those are also down dramatically. So the big ticket, motorbikes, all of those are down. Retail sales are sort of flattening out. But we're also seeing across our credit card book, so HSBC has around 350,000 credit cards in the market. We have the highest spend per card, so it gives us some very, very valuable data. On our premium cards, spend is staying the same or increasing, which would indicate that those people have the personal balance sheet and wealth to be able to continue. But in the next layer down, we're starting to see a significant slowdown, certainly in travel, certainly in hospitality spend, certainly in leisure spend. So that is clearly the sector of the economy that is starting to feel the pain more abruptly than many of the others. And finally, is tourism to the rescue? Yes, there has been a pickup. We're getting to roughly 50–60% of pre-pandemic levels. But as I said, I think Vietnam missed the opportunity to really capture the wave because it opened before other countries. We don't see a resumption back to sort of 18–20 million tourists, which was their expectation in 2019. Most people book their holidays 2 to 3 months in advance. Summer's the big period. I think Vietnam will sadly miss out on what could have been significant upside there. So if I look into my crystal ball and try and forecast what does the future look like, I can say that it will be a bumpy road. It is going to be a bumpy road for at least the next 6 months. We may hope for a slight turnaround in the fourth quarter, but either way, I think you have to brace yourself for more bumps along the way. One of those bumps is the anti-graft campaign that we've seen in Vietnam. Now, many hope that that has played out its course, but the impact that that has had is that decision-making within government has slowed significantly, if not completely stopped altogether. And one of the key things that Vietnam needs to continue its growth is infrastructure spend, which seems to be put on hold. and also spend around the sort of transition to net zero ambitions of the country, which again are being on hold. The PDP-8 still hasn't been released. So against a challenging external economic environment, a slowing down Vietnamese consumer activity, tourism not bouncing back quite as much as we expected, and a government which has been very introspective, where decision-making has slowed significantly, it doesn't bode particularly well for next year. So our view is that we've had to readjust our numbers for this year down to 5.2%. We'll have to see what second quarter looks like. If second quarter is as soft as first quarter, that number may end up being a 4 handle, so something beginning with a 4. So either way, that's a material come down from where we were last year. So as they would say on a plane, please return to your seat, fasten your seatbelts. We're entering an area of turbulence. I think that is my advice. That's what we're hearing from our customers. That's what we're hearing from our research team. It's time to tighten the belt, just weather out the storm. But at the end of the day, a lot will depend on a change in the wind. If consumers in North America, consumers in Europe, and key export markets start to spend more, start to get a little bit more comfortable, if inflation genuinely becomes under control in those markets, then those external factors will continue to come back and benefit the Vietnamese economy. So we should hopefully, once the wind changes a little bit in those markets, see some benefits for Vietnam. So our forecast for 2024 remains at 6.7%, so a better year ahead than this one. And then I'll just finally put this up just to make sure that my legal and compliance team don't sue me for anything that I've said, or anyone sues me for anything I've said. So I'll stop there. I don't know, Torben, do I pass on to Thue and we do Q&A afterwards, or do we stop for Q&A now?
Yeah, so thank you, Tim. I think this was very interesting, especially from the banking sector view. And I would suggest that all the participants, please raise your questions in the chat box so far, or raise your hand, and then after Thue, maybe Tim and Thue together, they can answer the questions afterwards. So thank you, Tim. I think this was very insightful. With that, I would like to continue with you, Thue, today. You will have a view on the Business Climate Index. As I mentioned before, the Vietnamese Business Climate Index is from the enterprises and to the consumers. And so let's have a look what comes out of the Business Climate Index, and if this is matching somehow also to what Tim is saying. All right, Thue, up to you.
Thank you very much, Torben, and thank you very much, Tim. I was a bit nervous about the presentation here today, because I think it is a time with a lot of uncertainty, and what I will do, of course, in this presentation is to read into what is the feedback from enterprises and from consumers here, to kind of take the temperature on those two target groups and see how are they acting. I think my disclaimer will be that I'm in general of an optimistic nature. I work with the commercial opportunities, so I gave myself the assignment to try and look for the positive spots here. But else from that, I share very much the sentiment that this is about buckling up and very much observe on what will happen during the year, because it is a very challenging year. I told my own team here that we'll make a plan for the year, and every month we're going to look to the left and to the right and to the left again before we cross the street, in order to be clear about that we will have adjustments. And of course the issue is that no one in Vietnam has ever looked to left and right before crossing the street. So this is a new experience for us, both in traffic and in managing the economy this year. Just very briefly, so DecisionLab is a market research company. We've been in the market in Vietnam since 2008, and we see ourselves as the leaders in digital and agile market research here. We track quite a lot of things in the market in Vietnam. So first of all, we track around 400 brands across 16 metrics every day. Then we profile the Vietnamese consumers on more than 10,000 different parameters. And then we survey within our community of 150,000 community members. We survey them on everything from their consumer sentiment to different ad hoc projects for clients. So I'll try and draw on this in this presentation to give you a good mix of where Vietnam is heading. Then we've been proud supporters of EuroCham since 2018 and helped both measure the business climate index and also support in how we deep dive further into the data. And part of the changes we made recently was to focus a bit more on sectors, and I think that was really timely because this is some of the things that we should really look into today. The business climate index, as you know, has become quite a leading index in Vietnam, and is quoted. I think it's usually there are around 150 press mentions every time we publish it, and it's used quite a bit by government as well. And with this initiative here, we hope also in a year where it's not COVID we are on the lookout for and vaccine rates and so on, but macro indicators that hopefully we can use these sessions here to answer back after many of you have answered the questionnaire, to give you some feedback and some guidance on how you should operate your business then. I just want to be super clear on the data that we're using in this presentation, because a lot of these things change pretty fast, and I think the sentiment over the last month and a half has changed quite a lot. So the EuroCham Business Climate Index is always it runs at the end of each month, and data here is from or end of each quarter, and data here is from the end of March. Then we'll use some consumer sentiment data that we tracked around the same period of time, and then we have used a little bit of data from our latest omnibus survey, just to give you a little bit of indication of how the mood of the Vietnamese is right at the moment here. So to kick it off, we are around 1 year since reopening, and the question is, how are we doing in this exciting time after we reopened the world, we reopened Vietnam, and the economy is sprawling. Well, I think a lot of us have been through a couple of weeks here with also the surge in COVID, where we don't feel too well about the situation at the moment. I took a bit of press clips, and this is also a bit of what Tim has been discussing. I mean, there are quite a lot of negative stories, both a lot of it regarding manufacturing in Vietnam, but also some regarding the consumer market, especially smartphone sales in Vietnam. And I couldn't help myself from adding Tim's post here about bumps in the road, yes. Dark clouds on the horizon, yes. Challenging times ahead, yes. But there are luckily also a few positive stories out there, and a lot of it is around the local economy. Golden Gate Group that runs around 500 restaurants in Vietnam, bouncing back, and I think the whole sector, F&B sector, they might be seeing some trouble this year, but you have to remember that last year was a very good year. So landing a little bit lower than last year might still be a fairly good situation. So the first group we're going to look at, that's all of you, all the European business leaders that we measure, and I wanted to, just before we go in depth, just to put this chart up together with the famous Mike Tyson quote that everybody has a plan until they get punched in the mouth, because when you look at this chart in the past 3 years. It basically concludes that if we start from pre-COVID at 77 points, we were all optimistic. We had great plans for the rest of the year, and we've probably done our budgets for 2020. 1 quarter later, we are almost around zero, and 1 quarter later again, we are in a very negative field, which basically means that all of us have been in a situation where we have promised things to our teams in Vietnam, to our bosses. And by the end of the day, it's completely off. And we have then repeated this in both a positive and negative way for 3 years, where none of us have basically been able to predict where we were going. And I think for for any leader, this is being punched in the mouth repeatedly over 3 years' time. And therefore, what I'm hoping a little bit for is that we maybe also just get some stability, so that we are able to plan, and we don't continue to see a period of time where it is completely difficult to look into the future. And I think that Tim and I, we're then trying to predict what will happen in the future. But I think at the same time, if we look back the past 3 years, then everything that really shaped the economy has been unpredictable. So it is a rather difficult job, and what we can hope for is just to get some instruments to point us in the right direction, and to look at what to measure and how to take the temperature in our business. Now then we have the consumers in Vietnam, and from our partner YouGov in the UK, they run this mood tracker every month, and we took that idea to Vietnam. We did it during COVID as well. And this is data from yesterday, where we basically ask Vietnamese consumers which mood they're in, and it is kind of saying the top 3 answers here: satisfied, happy, optimistic, followed by energetic and inspired. Something in the pessimism within the companies, the foreign business sector, is not really sinking in with the Vietnamese consumers yet, and that might be one of the reasons why we may still see some optimism in the domestic markets. So I have a similar image as before in terms of is the glass half full or half empty, but a little bit with a different starting point, because we are definitely at half empty, and that's basically the result we get out of the last round of the EuroCham Business Climate Index. So what we are seeing is a score of 48 points as a conclusion from the last round of interviews we did. The interesting thing though is that it is stable at 48 points. So we have exactly the same score as we did in Q4. And I find that a little bit interesting because, as I said before, one of the things we could wish for is just some stability. But at the same time, this is 48 in Q1 the same as 48 in Q4. So if we look a little bit further into the data, then this index is comprised of 2 measures. We ask how has the past quarter been for you, and how do you project the next quarter. So if we look on the left side, what we're basically seeing is that we had a fairly okay quarter 4, but expecting quarter 1 to be quite bad. Whereas the situation in the latest tracking is slightly different, that business leaders are seeing that Q1 was in fact quite bad, also to some extent worse than expected. But we are expecting improvements in quarter 2. So you can say that from mixing good in the past with bad in the future, it's now bad in the past and a bit better in the future. So in that sense, there could be some indications towards a turning point, but this is something that we need to be very, very careful about concluding at this time. If we look a little bit more as to why, there is a small increase, not statistically significant, but a small increase in terms of the economy is likely to stabilize, improve next quarter. And then there is a 6 percentage point decrease in the expectations towards the deterioration. And I think when we all meet people in our network, then we hear very different stories. I mean, I'm in the Nordic Chamber of Commerce, where a lot of our members are furniture manufacturers, and for their part, this is definitely a negative situation. But I think, I mean, the foreign or the European investment community is fairly broad, and there are many different perspectives to this. If we look at why European companies believe there might be a slight improvement, it is because of the expectations to revenue growth. So we are actually seeing from Q1 to Q2 that there are expectations of a fairly significant increase in new revenue, and also a much smaller group of companies expecting that their revenue will deteriorate. So I think this is the key to why companies overall are expecting a bit brighter future. At the same time, we see very similar data points when it comes to headcount planning and investment planning compared to last quarter. I remember when we were drafting the press release for the last quarter, we discussed a lot around the conclusions here, and a lot of what we read out of the previous quarter's data was that companies were seeing themselves in a wait and see situation, that they would not necessarily cut staff now because things could improve. I think now we're seeing very much the same, but maybe with the opposite conclusion, that things might be improving on average, but we are not yet ready to believe in it, and therefore companies are still in a wait and see position. Now, I've mentioned quite a bit that we need to be cautious, because this is the index is average across quite a lot of different sectors, and I wanted to highlight the top three and the bottom three here. So we're seeing tourism and hospitality. So this was the period where it was announced that the visa rules were improving. So a lot of optimism there. They were fairly negative in the last quarter. So I think that has quite an impact on the average. And then in general, we see sectors that are more reliant on domestic consumption to be more positive. And in general, the business index scores that you see here from around 60 towards 67 are fairly positive scores, indicating growth in those areas. And then you see transport, logistics, other manufacturing that's typically export, that are very negative about the future. And automotive has of course been hit very hard, both because it's the big ticket item, and also because effective interest rates in Vietnam has been fairly high in the beginning of the year. So I want to move on and talk a little bit about the consumers, based on some of the data we have available. So we track every month how consumers see the economy. Will it be growing, booming? Will it remain stable? Will we be in a depression, recession within the next 12 months' time? And in general, we see fairly stable figures here, more towards the positive side. For consumers, not extremely positive, but we see consumers on an average being more on the positive side. We also started measuring this year consumer sentiment in Vietnam. Unfortunately, we don't have the tracking over time, so I'm just going to share a few conclusions, because we started this in March, and we are seeing quite a few percentage points of decrease from March. But if you compare the data towards April in US, then the Vietnamese consumers are, as we also many of us know them, quite a lot more positive than we see in that market. So now, if we look a little bit closer into why this is from March to April, we see in general tendency towards a positive evaluation of how their own financial situation will improve, divided between around 1/3 saying it will develop positively, 1/3 saying it will maintain, and around a quarter saying that it will worsening. Again, important to see just from the 2 months we've been tracking it, that it is getting quite significantly worse, but still on average we are remaining stable or positive. And I'm quite surprised myself to see also for appropriateness of big ticket purchases that consumers are quite positive. I think it's probably the broader range of big ticket items, because the auto market is definitely not developing that well at the moment. When we look at the overall economy, then the Vietnamese are fairly positive in the next 12 months on how the Vietnamese economy will develop, that things will get better. We asked also a little bit into different categories of where spending may increase. And the categories that are tracking the highest is in terms of fresh produce, personal care, and fashion. If we look at financial priorities, then it's a quite interesting picture here. So we see actually similar tendencies, similar priorities as during the COVID years. But a little bit more, a little bit stronger. So the Vietnamese are still quite focused on saving money for unexpected hardship, ensuring that I and my family are adequately protected, and then making money by investing. In this period, we've seen a boom in the usage of different investment platforms in Vietnam. But I think what it tells me, and part of what we concluded during the COVID year, is that also when you are a Vietnamese family, you are in a situation where you see, well, with these difficult years, you need to make sure that you are a bit more conservative in how you handle your finances, and make sure that you can protect your family well. And we see that both in terms of how willing consumers are to take on risk. And as an example of that, a little bit on where investments have increased. So we see more consumers choosing to keep money in time deposits, saving accounts, so very secure areas, and gold also increasing compared to last year. Yeah. So in this situation here, where we are buckling up for a year that we can't fully predict, where companies are to the negative side barely, and where consumers still remain some positive attitude, but with a clear declining from last month. What should we do? And we've tried to just hear some indications for what could be viable strategies. I think the first one that's really important, and this is something we also apply in our own company, is to understand that the impacts are sector specific. So it's really important to keep a lookout for which sectors are your customers in, which ones will be impacted, which ones are not impacted. And I think this is key in terms of not turning sour on the entire business, but remember to keep a positive outlook on the areas where our 5% GDP growth will actually provide growth in Vietnam. Then I believe it's important to sit tight right now. I think we are at a point this year where we see both initiatives from the government that are pointing to a positive direction. Question is if it's a little bit too little, too late. At the same time, I think also looking at the global economy, we are perhaps at a stage where interest rates might not increase that much further, where inflation is getting to more controllable levels, and I think therefore it's important to keep a view on how things will develop in Q2 in terms of making conclusions for the rest of the year. And then this might be difficult for many of you who work in export sectors to follow, but in general, of course, as we also saw before, we still see growth in services in many areas in the domestic market. So if it is possible to focus more and tap into the continued domestic market growth, I believe that will be a viable strategy to weather the storm. So with those points, I will give it back to Torben and then see if there are any questions.
All right, good. Thank you, Thue. I guess we have all many questions here, so I would like to move now to the Q&A session. Nyung, if you could maybe guide us through the questions. I would like to ask the audience either to raise their hand and ask the question verbally, or of course you can also send a question into the chat box, so we can answer, or the two speakers can answer the question here. Nyung, I would hand over to you.
Yes, so we can see from the chat box there are some questions, and also see that teams already addressed some questions as well. So if I think that this is better for the interactive section. So if anyone want to raise a question, can you please raise your hands and ask the question directly to our speakers.
If not, maybe you can just read out the questions, and then maybe Tim or Thue can answer them on the spot.
Yes. So so the first question is in the chat box is any benchmark on GDP predictions compared to the other markets in Southeast Asia? So I think this question is for Tim.
Okay. So the short answer is yes, we do have forecasts. Hold on, I will open my latest screen on them. So it depends which countries people want. But if they want 2022, so if you get your pens out, we will have Indonesia at 5.3. For 2023, I beg your pardon. So Indonesia, we have it at 4.6 this year. We have Malaysia at 4% this year. We have Philippines at 4.8. We have Singapore at 2.1, we have Thailand at 4, and we have Taiwan at 1.6. And if we look at forecasts to 2024, taking those same markets, we have Indonesia at 5%, we have Malaysia at 4.6%, we have Philippines at 5.6, we have Singapore at 3, we have Thailand at 3.9, and clearly Vietnam at 6.7. So despite the short-term pain that Vietnam's going through, I believe that the long-term fundamentals are still very strong for the country. And we've got to just take into context the Vietnamese performance against other markets. So this year, Vietnam will still probably be the outperform market in Asia. Indications are that it will also be the outperform market across Asia next year. And I believe there was another question that was coming in saying, what is the future for Vietnam? Fundamentally, I still think it is an economy that will be moved forward by FDI growth coming in. The China Plus One story still has a way to play. I think the growth of the middle class and the consumer story will continue to propel Vietnam forward. I think the transition to net zero and infrastructure, when the government starts to spend, will also act as a multiplier effect and push the economy forward. And hopefully tourism will come back to representing 9, 10, 11% of GDP going forward. So I think the short-term pain is there. I do think that the long-term fundamentals for the country still remain positive. And as I said, I think Vietnam will be the outperform economy across Asia Pacific over this year and next year, despite the short-term challenges.
Thank you. So the next question is regarding the boosting domestic tourism. Tim and Thue, any recommendation from your side?
Is the recommendation how to boost tourism? Because I'm not sure I'm placed as a banker to do that, apart from traveling myself extensively in the country. But I think all indications are that domestic tourism has picked up. But the reality is that for 2.5 years, most Vietnamese travel domestically, and many of them are now taking that opportunity to go to other markets, whether it's Japan, Taiwan, Thailand, Singapore. So we do see a little softening in the domestic tourism market. So it won't continue to grow at the same pace that it did before.
I think also, if I can add, that, but it's just my kind of sense after the COVID period, I feel like both when it comes to FDI and when it comes to tourism, Vietnam is suddenly met with a new set of expectations. We are a middle income country where people expect a certain standard from government administration, a certain standard from how the airport handles incoming tourists, how the visa system works. And I think just because we are now a few years later, I think some of the things we need to realize in tourism is that Vietnam cannot keep attracting people just by being the hidden gem, the place that is undiscovered. I think if you go to Cam Ranh or Da Nang, a place like that, you will see that, I mean, it is plastered with big hotels and so on. And what that means is that we need to move up in a new league where Vietnam is not selling itself, and we need to be much clearer in terms of how we brand Vietnam. How we promote Vietnam as a tourism destination. What is it that we can offer compared to Thailand, incredible India, Malaysia, truly Asia, and those places, right? So I think we will see that Vietnam needs to really get organized when it comes to promoting its tourism industry. And I think from the times where I've been commenting also on the national branding strategy, I think that goes all over. We need to be clear in what we want to be and what we don't want to be, and then start promoting that professionally.
And I think that there's only last questions about the factors that investor and businesses should consider when investing in Vietnam this year. So maybe this question will address both Ray and Tim.
Yeah, I mean, look, the reason foreign investors invest in Vietnam are, first of all, you have a cost competitive environment. So that's number one. Secondly, you have stable government. So despite the recent changes that we've seen in government, it is still the Vietnamese government. The ultimate ambitions around FDI and integration into the global supply chain remains, regardless of who is in what seat. I don't think there's been a significant ideological shift in the way the Vietnamese government operates. The Vietnamese people, I mean, they're highly trainable, hardworking, entrepreneurial, so there's that benefit. We've had a broadly stable currency. I mean, I think last year the Vietnamese dong lost roughly 8% against the US dollar, but that's significantly less than Korean won, Japanese yen, Thai baht, competitor currencies, or even pound sterling or euro. So you have a stable currency. You have inflation under control broadly. It really hasn't been as big an issue here as it has been in other markets. So I think that draw is still here from the manufacturing sector. Clearly, the government needs to do some stuff around infrastructure, because as more and more of these companies are coming here, the road network, the logistics costs associated with moving stuff in and out of the country need to be addressed. But I think fundamentally that whole story continues to play for Vietnam. And if you are an investor coming in here trying to capture the Vietnamese middle class story or consumption story, I think that still has a way to play. Average age of the country is relatively young. We've got strong GDP growth. We're seeing, and Thue can speak to this far better than I can, but changing behaviors and how people consume and what they consume will certainly be a key driver of the economy going forward.
Yeah, I think what we're going to see is, I think the first thing, and I actually saw that on I think it was one of Tim's slides some time ago, but that HSBC was expecting that this year, I think Vietnam would be a top 10 contributor to global growth. And I think that together with the growth in the middle class, you will see that when multinational companies need to hunt for growth, then Vietnam will pop up more and more as a leading market to get that growth. And I think we're getting at a critical mass where Vietnam will play a larger role in global boardrooms. We're already seeing that in some areas, for example, in beer, etc. But I think we'll see that on a broader scale. And what happens in Vietnam for any emerging market, you start with your Unilevers and Nestlé that can cover the lower part of the pyramid and your Louis Vuitton and the expensive goods for the very rich. But what is really interesting to see in the consumer markets today is that the growth that we see is around healthcare products, traveling, financial services, a lot of sectors that appear as a result of a growing middle class that can afford to spend on new items to improve their living. And I think this will speak to a lot of European companies that will have services or products in these areas where Vietnam will, with its 100 million population, will be a much more interesting destination.
Thank you. So the next question from Luke from the advocacy. Do you have any more data information regarding the Vietnam green growth strategy in terms of business opportunities, business growth, and citizens' consumer perceptions? So, team.
Sorry, is that question in the chat so I can just read it?
Yeah.
Hold on, let me scroll down. Okay, do you have more data information regarding? Look, I think fundamentally Vietnam has made a very bold statement to COP26 that it would aim to transition to net zero by 2050. There are a number of key challenges around that. I mean, the most obvious one is the PPA agreements and whether or not curtailment is something that the Vietnamese government's prepared to put some legislation around. But I think the big challenge is that everyone is still waiting for PDP-8. That still hasn't come out. And until that does come out and gives a very clear line of sight as to what the metrics are that the government's working towards, it's going to be very difficult for foreign investors to rally around and actually put capital on the table until that they have some clear visibility on that. So I think that is a key stumbling block. We keep being told it's out imminently, but been told that for 9 months. I would hope that that is released before COP28 in Dubai. My understanding is that PM Chin and a very senior delegation will go to that. And I think it makes sense that if they are, that they need to be able to show that they've made material progress since their commitments at COP26. So fingers crossed that comes out in the next 6 months. I think COP28 is in November this year or end of October this year. So we're all waiting for that to happen. And that'll give a much cleaner and clearer line of sight as to actually how the government is going to manage the campaign.
Yeah, and I think it coming a little bit back to how Vietnam is branding itself. I think that statement by Prime Minister Chin at COP26, or that commitment, it is now part of the Vietnamese FDI brand. And I think this is really important for the government to understand in terms of why it's important to deliver on this. So I can see for several of the members that we have in the Nordic Chamber of Commerce that they were interested in Vietnam to do investments here, to set up factories here, because of that commitment, because there is an ambitious partner that clearly makes Vietnam stand out from the region. And I think it's important to deliver on that. And we have quite a few members, who want to invest in wind farms and energy, but the rest of the members are interested in sustainable production or sustainable business. And this is still very, very difficult in Vietnam. So I think there's one side in terms of making it possible to make these large-scale investments that will really change the energy mix in Vietnam. But there's another side of making sure that provincial governments can support that you can actually connect and purchase green energy for your production, that you have access to proper recycling, wastewater treatment, and other things that can support your strategy. Because this is part of the commitment, and if we don't carry through on the brand, then we really miss an opportunity here.
So we still have 2 more questions from the audience, and I think after these 2 questions, we can close the sections. So the questions come, do you see any signal of big new FDI projects come to Vietnam within the next 2 years?
The short answer to that is yes. We've continued to see big investments coming in the tech space, but my gut feel, and also indications from speaking to our customers, that is until the political system becomes more stable, and I'm hopeful that will happen now that we have a new president in place and 2 new deputy prime ministers, etc. There is a number of FDI decisions that are still sitting in boardrooms in the likes of Taipei and Seoul, because to put down significant investment, tech plant is $1 billion. It's not a textile factory. So I think once we get line of sight that all of the changes that have been happening in the political system here are done and dusted, that the government and the political system feels capable of making decisions once again, and that we're back to business as usual, I think we will see far more coming in. But right now there is risk associated with taking that sort of decision at a time of political volatility. But I do think that, like all these things, Vietnam will pull through and do the right thing in the end. And let's be frank, right now there's not huge options for other markets where they would look to do that. So I think there's a delay that's happening at the moment, but fundamentally I think we get back to where we were before once the political system or situation stabilizes.
First, any suggestion from your side?
I will leave that one to Tim.
Okay, so the last questions. What you see is witness for being developed to be a supply chain hub following China? So this will be our last questions for the section. Okay,
so I think development of infrastructure is probably the biggest weakness that needs to be addressed. I mean, these numbers are directionally correct, so honestly, I can't remember them off the top of my head, but Vietnam has roughly the capacity to export 30 million containers a year. And I think most of that is sort of the Ho Chi Minh Saigon port, which has something like 20 million, and then you have Haiphong and Da Nang making up the rest. In comparison, China exports 400 million containers a year. So a 10% move of Chinese production to Vietnam is more than the entire capacity of the country. And most of the ports have been operating at over 100%. The same is true of airports. I don't know if any of you have landed recently at Tan Son Nhat, but the immigration queues are, abhorrent. I mean, if you're a new investor coming into Vietnam and that's your first impression of the country, it really, really is very negative. So there are steps that have to be taken because the infrastructure is creaking at the seams. The government has a commitment to spend roughly 7% of GDP on infrastructure, but that isn't being released at the moment. So that is an area of ongoing concern of anyone that's coming to invest in the country is, can the infrastructure keep up? And if you're looking at consumer companies coming here and looking to distribute in Vietnam, talking to the likes of Unilever, they tell us that something like 24% of their cost is just logistics, moving stuff around the country. So the cost of moving goods either to a port and exporting it or moving it domestically so that you can get it to the end consumer is very, very high, significantly higher than it is in other markets. So clearly I'd say infrastructure is the biggest challenge that they have. And obviously infrastructure is not something you can switch on and off. I mean, that's a long-term plan that needs to be rolled out. And as we know, Chinese infrastructure is often world-class by comparison.
Yeah, I think just to add on it, I think what is important that the Vietnamese government keeps in mind is also that we are at a stage now where Vietnam needs to grow the quality of jobs. And I think, there's a very stringent focus on the amount of FDI being committed. But I think it's critical that the Vietnamese government is looking towards the quality of the FDI that enters, both of course in terms of local sourcing, but also in terms of guiding towards what are the kinds of jobs that we want to have created here. What is there a long-term vision for the business? Does these companies, are they ethical in their investments? Do they take care of the society and the environment, etc.? Because we are in a good position when it comes to that at the moment. I think the other thing I've been commenting quite a lot on recently is the release of the last provincial the provincial competitiveness index, where quite cleverly the provinces they have to compete in terms of their business climate, and my hope is really that this will also lead to more of a diversification of the investment, so that it can benefit people across Vietnam and not just around the two hubs of Hanoi and Ho Chi Minh City.
So I would like to thank again team Thue for your time, and we have a very interesting section and interesting Q&A sections. And I also would like to thank you so much for valuable participants for all you today. And we are very look forward to your seeing you again in EuroCham upcoming events. Again, thank you all very much. Thank you.
Thank you very much.